All right, let's get right into it. After a really brutal sell-off on Tuesday, the stock market pulled off this massive, almost unbelievable comeback on Wednesday, January 21st. We're going to break down exactly what happened and, more importantly, why.
And wow, this is the number that really tells the story, isn't it? The Dow Jones Industrial Average just exploded, surging nearly 600 points. I mean, after the worst day we've seen in months, this was a huge reversal that got everyone's attention.
So that's the big question, right? What on earth caused this whiplash? How does the market go from a massive plunge one day to a powerful rally literally the next? That's the core mystery we're unpacking in this explainer.
And you know, this rally was everywhere. It wasn't just a Dow thing. The S&P 500, the tech-heavy Nasdaq, and the small-cap Russell 2000, they all closed up over 1%. It was just a sea of green across the entire board.
But if you look a little closer, one index really jumped out, and it kind of highlights a trend we've been seeing. The Russell 2000, which tracks all those smaller companies, leaped a full 2%. And that's a big deal because small caps are often seen as a barometer for the domestic economy. Their strength suggests that broad investor confidence is coming back.
So what was the single thing that did it? Well, it all comes down to this: a major geopolitical reversal that completely flipped the market's mood literally overnight.
The simplest way to put it is this: the threat of a new trade war, which had been spooking investors for days, was suddenly just gone, taken right off the table. And that's the news that lit a fire under the market.
Now, to be specific, the market was really worried about President Trump's threat to slap new tariffs on several European NATO allies. This whole thing was tied to disagreements over U.S. plans for Greenland and was supposed to hit by February 1st. You know, it's that kind of uncertainty that markets absolutely hate.
And this timeline just shows you how fast everything can change. On Tuesday, that tariff threat felt very, very real, and it sparked that brutal sell-off. But today, President Trump announced a framework deal had been reached, no new tariffs. The result was the market breathing this massive collective sigh of relief.
Okay, so with that relief came some very clear winners. When fears of a trade war fade, certain parts of the market just do better than others. So let's break down who had the best day out there.
And the leaders were pretty much exactly who you'd expect. Cyclicals. Those are the companies whose fortunes really rise and fall with the economy. They led the way, along with materials and industrials. These are the businesses that are most sensitive to global trade. I mean, just look at the mining stocks. Vale jumped over 4%. Rio Tinto was up 3.7%. These are the companies right on the front lines, and they just soared.
And this slide perfectly captures that change in psychology. Yesterday was all about fear, uncertainty, and just selling stuff off. Today was the complete opposite. It was a mood of relief, de-escalation, and just widespread buying. It is amazing how quickly the entire story can shift.
But as exciting as today was, we really have to put it in perspective. One fantastic day doesn't magically undo all the recent damage. So let's ask, where do things actually stand right now?
And here's really the key takeaway. Today's impressive rally, well, it only erased about half of the losses from Tuesday's huge plunge. So think of it like this: we've climbed about halfway out of the hole, but there's still a pretty big weekly deficit to make up.
And if you want the hard numbers, here they are. For the week, the Dow is still down about 0.6%. The S&P 500 is off by almost a full percent, and the Nasdaq is lagging the most, down 1.2%. So despite all those big green arrows today, there's still ground to recover just to get back to even.
Which, of course, brings us to the big question: what's next? Was today just a one-day relief rally, or is this the start of something more sustainable? Let's look at what investors are watching now.
So there are several key things coming up on the immediate horizon. We've got the weekly jobless claims, which give us a pulse on the labor market. Then we dive headfirst into earnings from huge names like Procter & Gamble, GE Aerospace, and Intel. You can bet those reports will be critical in setting the market's tone.
And I think this quote really captures the mood out there perfectly. Yeah, the geopolitical calm was a huge help today. It gave us that big sigh of relief we talked about. But that does not mean all the uncertainty has just vanished. Volatility is probably here to stay for a while. So we end with this: the immediate tariff threat is gone, but we still have big earnings reports and global tensions to deal with. Now that you've seen the data, what do you think? Was today's surge the beginning of a real turn, or are we just in for more choppy, volatile trading in the days ahead?